Well, good afternoon. Time to unpack the latest developments when it comes to the markets. It was all about the Fed meeting yesterday, especially last night, with Fed officials unanimously agreeing to raise interest rates by 75 basis points. We saw U.S. stocks rally after Jerome Powell's news conference. Here's two things that stood out for me, and there's a number of things in that statement that made headlines, but the two that we should remember, at least at this point, is Jerome Powell saying that it's too soon or too early to say whether Fed officials would begin reducing the size of rate increases, whether 50 basis points or 25 basis points at the September meeting. Another thing that he mentioned is that he's more concerned about failing to deal with inflation than he is about raising interest rates too high or pushing the U.S. economy into a recession. We have Q2 GDP figures out of the U.S. that we are expecting. Economists are expecting the U.S. economy to have expanded modestly. This in a backdrop where mortgage rates are increasing. The U.S. consumer is starting to feel the pinch, and we're also dealing with companies that have not been able to replenish bloated stock inventories. Locally, when we look at what's happening from a stock exchange news service, we had interim results coming out of ArcelorMittal, Anglo American also reporting, and in the world's largest brewer, AB InBev, reporting higher sales as well as profit for the second quarter, mentioning here that consumers drank more beer even though prices are higher. But to talk to us a little bit more about what's happening in the markets, we are joined by Dale Hutchison, who's a portfolio manager at Absa Asset Management. Dale, thank you so much for joining us this afternoon. I mean, given the news that we heard last night from Jerome Powell, looking at how the markets reacted, how's our local markets reacting right now?
Well, our market is certainly higher when we look at the commodity names. Maybe it's on the back of some of those Anglo's results, but commodities are certainly higher. Where some of the domestics, I think, are taking a little bit of strain, and some of the rand hedges. So an Anheuser-Busch market clearly a little less happy with those results. But it seems to be a mixed bag today.
Let's talk about that Fed meeting. I mean, any key, statements or points in that statement that stood out for you, and what did you make of the market reaction?
Well, I mean, I think the 75 basis points wasn't a surprise, but I also think, some people view some of the commentary from the Fed as the Fed may be blinking, where, as you pointed out, they're still sticking to a pretty strong view that inflation needs to come under control. But in the same breath, they're sort of emphasizing this is data dependent between now and the next meeting, which isn't surprising, it always is. But the market seemingly thinking that, well, if we're going to see inflation starting to trend a little lower, maybe the Fed's going to raise rates, maybe only 50 basis points at the September meeting, and maybe they'll be pausing after that. And I think it's on the back of that we've probably seen the market respond positively, thinking that the Fed's maybe toning down the aggressive nature of its hikes.
Do you buy his statement that the U.S. economy is not in recession?
Well, I mean, I think those are always very technical, to determine whether the economy is in recession. I think the real fear is that the economy heads into recession, and I think that's probably a fair assessment at this point in time. In terms of the direction it's heading. It's not there at the moment. We're still at pretty much full employment and things like that. But yes, directionally we're heading towards that.
On that note then, I mean, him talking about the fact that it's too soon to determine the size of interest rates as we go into that September meeting, which data points within the U.S. economy then will you be concentrating on as we go into September?
Well, bearing in mind the Fed has two mandates. One is price stability, therefore inflation, and the other is full employment. So, to the extent that any of the employment numbers that come out, non-farm payrolls, etc., start to point to a significant deterioration in the employment backdrop in the US, I think that would certainly be a trigger for the Fed to moderate its increases in rates, because that is its mandate. It does have that dual mandate. I mean, clearly, general softness of the macro environment, GDP, etc., will also be, signposts that they're looking at in terms of the direction the economy is taking and the pace at which they maybe still need to be increasing rates.
Earlier this week, we had trading updates for some of the food retailers locally. What's your conviction on SA's food retailers, given the numbers that they were putting out even before earnings?
Well, I mean, those trading updates certainly pointed to a couple of players that are, I think, winning market share. Those being ShopRite and Pick n Pay. So, pretty solid top-line performance. Clearly, the food retailers are in a stronger position to pass through food inflation through to the consumer, albeit that I think they've been managing it quite well in terms of not putting the consumer under as much pressure as one might have gleaned from some of the headline inflation numbers for soft commodities, etc. I think they push quite hard back to the food producers, who at this point in the cycle have probably taken a little bit more strain. So, I think they're doing quite well. It is going to be a bit of a mixed bag. I think Woolies, their food business probably losing a bit of market share to ShopRite 60-60. And Pick n Pay, I think, despite strong top line, clearly the market a little bit more concerned about the OpEx guidance which we got out of them. And there's clearly a lot of investment going into Boxer and their clothing stores, which are going to be rolling out quite aggressively, etc., which I think has tempered people's earnings expectations, and therefore that stock, despite I think very strong top line, may be coming under a little pressure.
Before I let you go, as our local earnings season will get into full swing, which company or companies will you be paying attention to?
Well, I think as we look at today, Anglo's was one of those. Very keen to see how those results are playing out. Clearly, the mining sector is important, so we've seen a few of those results, and we'll look to the rest. When Glencore, etc., releases results. Sasol's also an important one. And then I think once we actually we've had the trading updates from these retailers, but we actually want to see how that's flowed through to the bottom line, and we'll obviously start to see that flow through over the next few weeks as well.
Dale, thank you so much for your time. That is Dale Hutchison, who's a portfolio manager at Absa Asset Management, giving us his perspective on the latest in terms of markets.